in terms of correlation, like how do you think Bitcoin will behave relative to other assets? Or some of these correlations will increase, and like how will Bitcoin evolve as in terms of like how people will think of Bitcoin in their portfolio?
No, that's a good question. I don't think that the correlation will increase. It will decrease in my mind. And there's a number of reasons around that. But the first thing is we talked about just a few seconds ago was, look, the people who are interested in this space, in the institutions, they're from the technology side. Like they look at this as technology. The technology analysts are the ones who are analyzing it. The ones who understand cryptography and cryptocurrency implications and how it all fits into the space. But once that kind of bleeds over and really moves into the financial world, and people start looking at this as it's digital money, I think that's where it starts to differentiate itself. But the big break will be when people understand that it's a store of value. Now, how do we get there, right? So the question is, like, what is it going to take for Bitcoin to be, in particular, to be seen as a store of value? And I think it's going to take the asset to have enough market value and liquidity that the volatility dampens. And that's going to happen in steps, right? So it's going to take a few very, very large institutional investors to start buying Bitcoin, right? And not just buying it, but then also announcing that they've bought it, right? So you've got 5 firms. We talked about this before. We've got 5 firms that control $30 trillion of investment assets in the world. So if you figure that there's about $700 trillion in total investment assets, $730 trillion in investment assets, that's a lot. 30 trillion out of 720. So, but 5 of those firms, you got BlackRock, Vanguard, Fidelity, State Street, and Morgan Stanley. And if any of those firms start announcing that they've really taken this and considered a separate asset, and we know that, we talked about Fidelity, we know that they're doing something. BlackRock, of course, is doing something. But when Vanguard comes out, when Morgan Stanley comes out and says we are putting this in our portfolios, that's going to be a big deal. So, and once they do that and they start buying it, then you're going to get a lot of other investment managers that feel like they've got to do this. So it takes time, but we'll come back to that in a second. But once they start buying this and they decide they want to have a 1% position in this, well, then Bitcoin, a 1% position in all assets, right? So if you look at all portfolios and across all asset classes, between bonds, investable bonds, corporate bonds, sovereign bonds, you've got stocks, you've got real estate, you've got art and collectibles, and you've got gold and silver and metals. So, but if you put all of that in a basket in one big portfolio, and you say that 1% of that has to be the separate asset class, well, then you're already at a $350 million Bitcoin, $350,000 Bitcoin. Sorry, don't want to get everybody too excited. So, but a $350,000 Bitcoin, okay, now you're talking about a $7 trillion asset, right? You get that up to 2%, and you're talking about over a $10 trillion, $14 trillion asset. Now you really do have the ability to put money in this and not see that same volatility. It's just not going to move the same way as it does here as such a small asset. I mean, we're not even half a trillion dollars anymore. So, but once you have that, then I think that it really takes off. And I don't know where that breaking point is, but it's somewhere before that store of value recognition that it just becomes completely uncorrelated. So maybe somewhere between $100,000 and $200,000 Bitcoin, where it rips up and it just completely decorrelates to the rest of the market.